Hey folks, happy hump day. Hope everyone's doing all right out there. Not a lot to talk about really. Basically, Asian equities pretty much followed Wall Street rally from overnight because we've gotten some soft US data. So the word on the street is that traders are a lot more, it's fueling basically the idea that, okay, we might get a stalling or a slowing down of the Fed's hawkish rhetoric. Do I think that is the case? To be honest with you, I mean, Jolt's numbers, I understand it could play a massive part in that, but NFP in that, in terms of, what happens on the NFP. So today we'll get the ADP employment numbers on top of US and Canadian trade balance data, all three at 1:30 GMT London time. Before ISM non-manufacturing. It's a tier one data, but it's not going to be much. It won't say much considering the focus will be on NFP. Yeah, for all traders, happy DoE day. We do have the DoE later today at 3:30 GMT. Dilly-dallying around, let's get to these charts over here. First things first, look at this Dixie. So we've broken through that prior high over there and just stalling around 110s. Low is below, so 109,940s. Right now, look at that. Like, that's just brilliant, brilliant resistance over there. Look at how clean that is. So breakdown, retest, we are staying below the 110 500s there and thereabouts. Chances are we might just be pulling back all the way to 109s, if not going to test this prior support and trend line over here, supportive trend line over here, on the road to NFP. We might get a bit of a jolt once the trade data and ADP comes through, but I don't think it will be long lived. So the ADP is similar to APIs, as in it gives people watch it, but it's not the end all and be all. So the NFP by the end of the day will be, and today's DOE will be the predominant factor in how basically risk factor, US economy, and then the DOE for oil traders. We do have the API coming in with a surprise draw of 1.77 million barrels. So we were expecting about 1.96, so it's close to 2 million barrels built from the prior 4.15. So instead of halving that prior build, we're literally into the negative space, which is good for oil prices. So that is it really. Sorry, I was talking about that. So that is what we are seeing, and this is on top of the fact that traders are mulling this OPEC cut, during the next meeting. Still pulling up. Look at that. Like, this was price action yesterday. Basically, you went parabolic. So that was 82.93s all the way to 80. I mean, I don't need to tell you guys. Pretty obvious how big a move that was. So we are holding close to the highs of yesterday. Look at that. Couple of pretty much the inflection between the 90s all the way down to this $83 handle. Things are looking positive. Well, price action wise is positive in terms of, how do you say this, risk sentiment. But do beware that this could potentially be just a relief before the storm. So the idea is that if NFP numbers come in absolutely horrible or good, either way, we'll talk more about NFP on Friday. But what I'm trying to say is that just don't jump on the bandwagon thinking this is just going to continue on forward, because inflation is still in the cards. Global tightening is still happening. Okay, there could potentially be a slowdown because now Australia's come in with a dovish rate hike. which is why one of the reasons the ASX 200 today hit 2-week highs. But apart from that, in terms of global trends, we do need, the likes of China to come back to the trading table, uh, and supply to get cut on oil because inflation, folks. That is it from me today. Any questions at all, just hit me up in Discord, email me, hit me up via Twitter, any of those. Facebook, we do have a Facebook channel now. Be sure to like, subscribe, and hit the bell icon to get notified for future videos. Stay safe out there, and I'll see you guys tomorrow. Cheers.